Thank you for introducing me and ADX. And look, it's a pleasure to be presenting to our Australian investors. Uh, Maybe not so much of a pleasure for our team in Vienna because it's 6:30 in the morning there for them. But it's very important for you to see that we've got a substantial team, and really we're generating a lot of value through our team who are based in Vienna. So I'm joined today by Paul Fink, our Chief Executive, and Dr. Ulrike Exner, who's our Chief Geologist, who's had a lot to do with our exploration activities in Upper Austria, and particularly the discovery and ongoing appraisal and development of Anshof. So today we'll talk mainly about Anshof because we've got a well drilling there. But then Paul and Ulrike will also talk a little bit about ongoing projects because we have, as you know, additional exploration that's going to be ongoing in the next 12 months. So I think ADX now, after a lot of hard work, provides a pretty compelling investment proposition, which is backed up by a very practical and sustainable operating strategy. The good thing I see for our investors is that we do provide underlying value through existing cash flow, originally from our Vienna Basin fields, and then from the discovery of Anshof. And we also expect to see substantial reserve growth. And that's all complemented by a very compelling exploration portfolio that we're going to be pursuing aggressively, but predominantly through farm outs. So, investors that are worried about dilution, where we go out and raise a lot of money to go and drill exploration wells, can relax a little bit, because the majority of our work program, in fact, the next 4 wells will be predominantly funded through farm outs and internal cash flow. But none of this can really work without capability, and our team has the ability to evaluate opportunities, generate opportunities, and operate projects. And I think quite often that's a little bit lost because a lot of companies have lost the ability to do that, especially at our end of the market. But we think that's what's required to be able to take the company forward. So just a quick snapshot in terms of our asset portfolio and financial information. You would have probably all have seen this before, but we operate predominantly in Austria. That's our main focus. But we also have permits in Italy and Romania. And it's not that we don't like those provinces, it's just that we like Austria a lot more. And we're blessed by certain things in Austria that enable us to move very quickly. And that's our people, access to an amazing data set, and actually a very supportive ministry that enables us to do things quickly. So right now, our market cap's somewhere around the 44 million. We've got cash of around 5 million that's unrestricted, and debt of around 2.2 million. So as I mentioned earlier, Austria is very much the focus of our attention. We think it's an amazing place to build a business. In a way, we've got third mover advantage. It's been dominated by 2 companies for over 75 years. We've been able to come into a jurisdiction and pick up a producing asset that provides strong underlying cash flow in the Vienna Basin, and also get into, if you like, a whole basin which we currently almost dominate from an exploration perspective, other than the previous owner, RAG, who's tending to concentrate on gas storage. So what this all means for us is that we've got really good running room. We've had access to about 3,500 square kilometres of 3D seismic. Hydrocarbons that are produced in Austria have a high value. We deliver oil from our Anshof field to the refinery in Vienna and get paid basically Brent price minus 2% delivered, which is really good pricing. But also gas pricing is very good, certainly compared to the US and also compared to Australia. And we are starting to see gas prices move up again from the summer lows. So what have we been able to do recently? It's all been pretty important for us to set ourselves up for the next year. Last year, we were able to increase sales very substantially. We generated substantially more operating revenue, and that also meant that we were not only able to fund our activities predominantly, but also repay debt. So we were able to pay 3.3 million of debt that we utilised to buy the Vienna Basin fields. In terms of transactions, we've done an important transaction with MCF Energy, which will be used to fund 50% of the Welchow potential discovery, I should say exploration prospect. The Anshof investment agreement with MND is a very critical transaction for us. It provides about 19 million of funding for them to earn a 30% interest, but importantly allows us to get 2 wells drilled and also actually get cash out of Anshof to fund further activities in the development of Anshof. But part of that was also the work we did with the ministry to endorse a partnership framework that had never been used before in Austria, and that enables us to move forward with multiple exploration investments that are basically endorsed by the ministry, and that just means we can move forward with certainty. That enabled M&D to farm in, but it'll also enable other transactions that you will see as we move forward. Earlier in October last year, we had a very important reserves report, 5.2 million barrels for Anshof, and that was following the drilling of the well, but before we commenced production. I think Anshof actually demonstrates how quickly you can get things done. We basically tested the well in April, and we were able to commence commercial production in October. So that was very impressive and something that you'd find very difficult to do anywhere else. But we've also been working on developing the portfolio, and you'll see a number of prospects that are going to be drilled over the next 12 months as a result of that. Operationally, we're ready to obviously drill Anshof. We spudded it earlier this week, and we're also operationally ready to drill Welchow. So that puts us in a position following the drilling of Anshof that we could actually use the same drill rig to drill Welchow. So this all brings us to a point, a combination of farm outs, funding, access to infrastructure, and I think good operational practices, which have put us in a position now where we'll drill the Anshof 2 well, and then following up with the Anshof 1 well. On Anshof, we're also in the process of installing a permanent production facility, and what that all means is it gives us the opportunity to increase our production at Anshof from about 120 barrels a day to what we expect to be in excess of 750 barrels a day. But also that facility gives us the opportunity to scale up. If we get anywhere near our 5 million barrels, we'll be looking at additional wells and additional production rate. But there's also, Paul and Ulrike will show you that there's a lot of upside from that 5.2 million barrels. So having that capacity to go up to 3,000 barrels a day, we think will be really important. But on top of that, we know that gas is very important in Europe. We've worked a long time now on getting Welchow drilled. We've been through a pretty extensive process. We think we're nearing the end of that process, and we're hoping to drill very compelling exploration well in the heart of Europe. But that's being followed up by additional exploration, a near-field gas prospect that we're looking to drill around the third quarter of next year. We expect that to be funded by a farm out that we'll be announcing very shortly. But also, Paul and his team have really developed some really interesting new gas plays, some shallow gas plays, which we can follow on with. So what we are seeing is a real enrichment to that exploration portfolio. But over and above Anshof, as I said, there's upside in Anshof, but there's also near field exploration, and you can expect further farming transactions ongoing, and also further portfolio development, including complementary renewable projects. Just quickly on our Vienna Basin field, that field's been producing for over 50 years. In the last 5 years, it's been producing at a relatively steady rate with very low decline. But it's not just production that's important from that field. We are connected to the oil grid, the gas grid, and the electricity grid. So if you're ever looking for a location to get into a hydrogen project and renewable projects, this is it. So right now, our Vienna Basin fields provide very good, stable cash flow for us to build our business, but they also provide, if you like, operating capability, and that operating capability is also being deployed at Anshof. So we see these as assets that are not only good for us in the near term, but also in the long term for our ambitions in relation to a hydrogen project and a solar project, which we won't focus on now, but it's important to realise that they're part and parcel of the Vienna Basin fields. So before I hand over to the team, it's important just to sort of look back and think about what we've been able to do at Anshof. I think we've learned a lot about as an Australian company entering Austria. Firstly, we realised that we've been able to get things done very, very quickly. We've been able to get on the ground, drill wells, and get into production at a very rapid rate. The discovery at Anshof 3 provides us with the opportunity to further appraise, further develop, and also we've been able to get very good commercial terms through our access agreements, access to infrastructure, which has made, if you like, what's at this stage a relatively modest project economic, but we see a lot of upside. So the relevance of this to us is the Anshof 2 and Anshof 1 wells have a large production rate potential. Paul will explain why. There's large reserves upside up to a multiple of 5 times our existing 2P reserves, but also, as I mentioned earlier, the ability to scale up to a substantial rate is going to be really, really important from a, if you like, a corporate point of view to developing the business. Now, on the right-hand side of the page, you can see there's a number of, if you like, valuation benchmarks that you could use, independent audits, brokers, and also the M&D transaction, which value Anshof at a significant premium to our current market capitalisation. But that's it for me. I'll hand over to Paul and Ulrike.
Thank you, Ian. If you could just go to the next slide. And we're going to talk about Anshof today, but I don't want to make it for investors boring and just talk about drilling a well. And here's a bit of a technical sketch we've put up for people who show a lot of technical interest. But as Ian already outlined, the well is of very high significance. At the moment, we're just drilling ahead in the 12.25-inch hole. We probably we've set the conductor, we set the next casing about 130 meters. You getting drilling reports as they arise. And then if you look at the right-hand side, you also see somewhere a gas sand insert in the casing design. And that's a sand we also found to be gas bearing in the previous well. We learned from that well. Ian mentioned learnings, and we set the casing before that, and we're off to the main target into our Eocene sand. These gas sands, by the way, you probably see later on the map, they can also be commercial fields. But we're going to talk about this today. We're going to talk about the oil discovery we had in the Eocene, deeper down, bit below 2,000 meters measured depth. That's the operations, and you'll be updated on a regular basis on that. Now, the left picture has a little bit of messages in there. We'll go through them later on. But just let me summarize what the significance of this Anshof well is. First of all, we have the possibility to significantly increase resources with this well. I talk about this later on. After our Anshof 1 well, Anshof 3 well, I should say, this is the discovery well. This was just a naming convention we had to go through with the mining authority. That's why the discovery well is called Anshof 3. We don't want to confuse you, but that's how it is. After this well, we did the reserve certification, and we came up with around 5.2 million barrels of oil equivalent as the 2P reserve. The upside, however, is 26 million barrels. And this image shows you visually what we are talking about in the subsurface. The background here is so-called 3D seismic. You can see mostly sort of noisy image, but then there's a band, a very strong band running through. The message here is we have very good 3D seismic. We can see what we're doing with the help of the seismic. And of course, we've got well data around. We talk about this a little bit later on. But the key thing is we take a little bit of a risk with this Anshof 2 well in that we go deeper, down deep of the Anshof 3 discovery. But the rewards will be tremendous, because if it comes in anywhere near to what we expect, in other words, depth prediction, reservoir thickness, etc., and we also find the oil down to is in the reserve certification report, then we'll have a new reserve certification to do, which will give us a number anywhere between the 5.2, which could be confirmed. That's sort of the base case scenario, but much more likely we're going to end up somewhere in between the 26 million barrels and the 5.2, which is a huge significant increase in reserves and value, of course, for our company and also for our joint venture partner, M&D. If this well does not come in, then we have a plan, and we show this to you later on. But you see in the insert Anshof 1, there's another crest of the structure, a high area which we can drill, and this will also deliver cash flow. This will also justify building the facility I'm going to talk about in a second. And in other words, the value of this will be preserved. The only thing which will be lost is the upside, but still it's a very valuable proposition together with the Anshof 1 well, which I'll talk about later on. I think we can go to the next slide now. This is a few images. Let's start from right to left. On the right, so you can see this pump check or nodding donkey. This is already our production from the Anshof 3 well. Ian already mentioned how incredibly fast we achieved this from drilling, testing, and then first production. The thing which Ian did not mention, which is on here, is that the well has been producing since October until September, so almost for a year. And we were restricted because we didn't have all the facilities there yet. So we restricted the well to about 140 barrels a day. There definitely could have done more. The open flow potential would have been in excess of 200 barrels a day. And we have experienced a very nice surprise, despite the fact that the reservoir sand thickness came in a little bit lower than what we predicted. It came in spot on the depth prediction, by the way, to show how good the seismic is. But it showed very good production behavior. Most importantly, we had no pressure decline. Now, that means in reservoir engineering terms that there's a big tank pushing in the back somewhere. And this is also a good justification to drill the Anshof 2 well. Moreover, we have not seen any water, free water production from the reservoir yet. And that's also the same message that probably the oil water contact, if we can find one at all with the Anshof 2 well, is as deep as the P50 or the 2P case, or even deeper. Yeah. So you can see where we ended up after the first well with 0.5 million barrels. Now we are somewhere around 5.2 in the 2P. And if Anshof 2 goes well, anywhere near well where we are, we're going to end up somewhere between 5.2 and 26 barrels of oil a day. The picture on the left is just the drilling rig with which we drilled the Anshof 3 discovery well, and this is also the same rig which we're using for the Anshof 2 well. Next slide, please. Yeah, this is again in pictures in the subsurface. What you see is a map which has different colors. So the dark green color on the top is where we think the Anshof 3 production well is draining from, and the Anshof 1 production will be well draining from. I'll talk about this in a second. So the point in the left, in the far left, this little black dot is the subsurface location. This is where the oil has been sort of produced from the Eocene sandstone reservoir until October. And what we are drilling now is actually down to the right, where it says 280 meters Eocene sandstone reservoir section. Now, the reason this is actually measured depth, this is not a stratigraphic depth, but 280 meters, because the well has a very high inclination. It's almost vertical. It's almost horizontal, and therefore will access a lot of reservoir. So in addition to the reserves I mentioned earlier, we also hope to get a significant increase in production by achieving two things. The reservoir will be stratigraphically thicker. We'll talk about this later on maybe. And the reservoir completion section is much longer. And this also means we can drain a lot more volumes at the same time. And this should then feed directly into higher production rates. So again, the numbers on the right I mentioned earlier. If the oil down to is around 1,720 meters TVD subsea, for argument's sake, it's 5.2 million barrels. If we can get at this step this oil down to proven, or maybe the oil water contact, then we end up somewhere, if it's the oil water contact, between 5.2. If you don't find the oil water contact, still 26 million barrels, which is a huge number for our company. And the 3P and 3C area currently is about 26 million barrels, which is pretty much controlled by another well. Okay, let's go to the next slide. Yeah, this is just an impression, a visual for you. I won't talk to the text too much here. That's for later to read, that we're moving ahead with the development very fast. Yeah? On the left, you can see the production facility, the early we had already. This is an earlier picture where we trucked the oil to the facility, and then it was with a train shipped, if you want so, to the OMV refinery in Vienna with a very good oil price we got there. On the right, top right, you see a visual drone view picture of what it looked like recently. You see the nodding donkey, but behind that you see, if you look carefully, two little pads with the future well locations of Anshof 2 and Anshof 1. You see the storage tank, and on the bottom right picture, you see a picture of the new facility, which we acquired recently from a company called Oneo in Germany. The unit is very new. It's been tested and used. This also means we will build it up facility. And that means very soon, next year, early in January, we'll have it commissioned and installed. And I can say that yesterday we had with the authorities a commissioning of this unit of some of the parts, and this all went very well. Again, testimony that you can do things in Austria, despite a relatively strict regulatory environment, relatively or very fast, I would say. Next slide. Yeah, and the reason we installed this quite large production unit is because the certified production forecast on the right tells you that with the Anshof 3 well, we have drilled the Anshof 2 well we are currently drilling, and the Anshof 1 well, which is sort of a cash flow well, if you want, on the top of the structure. We're gonna pretty soon up be to around 800 barrels a day. And if it's anywhere near what we expect in Anshof 2, we have a peak production rate of around 600,000 barrels of oil a day. That equates roughly into 1,500, 1,600 barrels of oil a day. Yeah, and this is of course a huge, significant increase of production for our company and our shareholders. And if you look at the time scale, that's not that far away. That's 2027. That's not a lot more than 3 years from now. So what we're doing near term is the existing Anshof 3 production to September 23 on the left chart. We are currently drilling the Anshof 2 well. We will finish with the permanent production facility, which takes us up to 3,000 barrels of oil a day capacity, if you want to do that, in January and February next year. Anshof production should commence, Anshof 2 and 3 production afterwards, so around February. And then the next well we'll be drilling shortly afterwards is the Anshof 1 well. Next slide. Yeah. Maybe some of you wonder why we're only producing 1,600 barrels, but we have a 3,000 barrels of oil a day production facility. Now I've brought Uli with me. Uli is our chief geologist, Dr. Uli Exner. She did her PhD in Switzerland, the University of Zurich, which is, one of the best ones in Europe you can get there. Uli is highly experienced in the area. She had a lot of exploration successes, if you want so. And I'll hand over to Uli to let her explain two important things. The message is you can find new oil with new ideas in the old, mature, proven basin. That's the Anshof discovery, and maybe the picture to the left. And the right picture is that we have a lot more prospects in our portfolio. This is a zoom in of the Anshof area. Uli, I hand over to you.
Yeah, thank you, Paul. So I want to show you this slide. We have a cross section running from the north to the south in the right image. And we see the crest of the Anshof 3 well, where we drilled 2 years ago. And we're now currently drilling Anshof 2 further down dip. So this Anshof structure is we discovered is something which is not standalone, but it has a lot of implications and follow-up prospects in the area. And the reason is that we came up with a new structural and depositional model to understand better the distribution of reservoir and the reservoir communication between existing wells. So you see, Anshof is not isolated somewhere, but it lies in between existing oil fields called Pfarrkirchen, Sierning, and the huge Voitsdorf field in Upper Austria. So to explain, we have a new follow-up prospect in the south, which is called GRB. It would be an appraisal prospect because one vintage well actually already drilled this structure, but it had a uneconomic, very small production, but it proved flow to the surface of oil. We have 3 follow-up prospects further north. One is SGB, and they are smaller, but they are within the same structural setting. Next slide, please. So I was talking about our new interpretation, and I want to give you an insight on what that means. We started off with an old fault model in the area, which was basically dominated by very steep normal faults, which only had small displacement, and only few of them were interpreted to be reactivated and now reverse, but still steep faults. And I, as a trained structural geologist, I was very uneasy and unhappy with this old model, and I thought there must be a better explanation because, to be honest, the old fault model just was not able to predict reservoir presence, and it was not able to predict the performance of individual wells, which were not communicating, even though they were really in short distance. So I started to reinterpret the existing seismic and use all the existing wells, and came up with a different solution, which is in the lower image to the left. And I preferred to interpret the structures in that area as shallow dipping thrust faults, which go down into the crystalline basement. And we tried so this was first step, the seismic interpretation, but of course you have to support this interpretation with hard facts, and that's what we did when we then again went to the core shed and looked at numerous core samples from the Eocene. And to the right, you see one example of our findings, which are bedding parallel slicking sites in the core, which means that we have almost flat or sub-horizontal fault planes, and not so much steep faults, normal faults. So this is this was one observation, and we did not only observe that in one well, but in very numerous cores. And so, and another observation is that we found also duplication of the reservoir units, and there is one example of a field further to the west where even the Eocene reservoir is duplicated, and the crystalline basement is thrusted on top of the Eocene. So, and this was also observed in other wells. And so this new fault model is supported by core and log data, and it gives a better explanation of these anticlines and troughs which we observe in the seismic. And it also can explain the observed production behavior, which is limited by faults and was not properly explained with the steep normal faults. So let's go to the next slide.
Yeah, this is sort of a summary of what we've talked about on the map you saw earlier presented by Uli in what we think is a nice 3D image for people who don't look at maps and seismic all day. This is sort of a historical overview of what happened in the area. So you've got the seismic in the background, which is very good quality. And the seismic actually helped us to build these images. What this brown blobs sort of mean, slabs mean, is a 3D rendering of our subsurface in the area. And you see these black lines going through these wells, yeah? And when we started off in the area, we had a few historical wells. There was one well in 1975 at the edge of this northern brown slab, which had very strong oil shows. And then further down, we had another oil well, which actually produced oil to the surface. There was a typical cementing and casing problem in the 60s, but it produced oil. At the time, there was no 3D seismic. They didn't understand it. This is the well Uli mentioned, and they said this is probably not economic, and they had bigger fish to fry, if you want. So Uli mentioned this giant field, the Volksdorf field, which the oil alone is about 33 million barrels production so far. But you know, this other Anshof discovery is not that far away. So we looked at it. We mapped up a few prospects in the northern. You see a little slab as well. Uli might talk about. Anyway, so we looked at it and we said, okay, what we're going to drill first. And what we decided to drill is the northern slab. Yeah. So we had these two wells which are marked, and then if you go click on the button for the next slide, you see where we placed our Anshof 3 well. Now, what you see also here is some colors. Yeah, some are sort of darker brownish and whitish. The whitish colors are representative of reservoir thickness, stratigraphic thickness, I should say, which is thinner. Thinner reservoir doesn't mean worse quality, as we've seen in Anshof 3 from the surprisingly good production from a thin reservoir, but it means that the total productivity is better if you go to the brownish area. So brownish is thicker, and given the fault model of Uli, because the faults actually can also be a problem for productivity, and we think we know how to avoid that. You go into this brownish area, and then you can expect, subject to avoiding faulting and compartmentalization, very good production. I should say, you almost always find oil in the area. You always find some reservoir unless it's faulted out. But if you drill in a mini compartment and you don't have the model Uli developed with her team, then you have a risk that despite finding oil and that despite finding reservoir, your productivity is not that high. So you need more wells. Yeah? And you can see that where we drilled Anshof 3 is on the top of the structure. That's what you normally do in exploration because the oil is on the crest, but it's also in a more whitish area. And if you click now the next button, you will see what we have in mind. The Anshof 2 well is down deep from this Anshof 3 discovery well, but it goes into an area which is more brownish. On top of that, you see also two green lines. The sort of the strong green line, not interrupted, is our, as per the reserve certification, 2P reserves case, and that should prove the oil down to whatever the number is, 70-20 in this case, TVD sub-C meters, and that would actually prove up the 2P reserves of 5.2 million. In other words, the proven reserves would be 5.2 or move very close to 5.2 if the value is anywhere near what we predict. The dotted line, the green one, is actually the result we can expect somewhere between the end of the brown slab, which is the 3D rendering of the structure, as big as it could get, limited by the 1975 strong oil show well, which means it would be somewhere between 5.2 and 26 million barrels, again in 3D view, how significant this could be. And the next structure down to the south, maybe Uli, I'll hand over to you and you explain what that could be. And I just finish with saying that could actually easily justify our 3,000 barrels of oil a day production unit, and it's a pretty low risk proposition. Uli, over to you.
Yeah, so Anshof is located in a thrust anticline above a thrust which is dipping to the south. But south of this is a further thrust, which we interpret as a back thrust. And in the footwall of that, we have another structural compartment, which in our view contains the same Eocene reservoir of good thickness. And this is what we're preparing in the last couple of months. This is a new prospect called GRP, and the expected minimum area of oil is lined by the red line, and it within this closure there is this vintage well which was drilled in 1965 and proved oil to the surface, but the reservoir thickness in that well was very low, only 5-meter cross thickness, and we expect, due to our new depositional model, to be the sandstones to be way thicker further to the west. So this is where after drilling Anshof 2, our next step out and a follow-up prospect should go to. And also you see further to the north a smaller brown area, and this is the follow-up to the north, one of 3 more prospects called SGB, and it is in between existing oil fields, and it's more or less the next thrust anticline further to the north of Anshof. So if we confirm our models by Anshof 2, then this would be another candidate for further exploration.
Okay, we can go to the next slide. Yeah, just it's marked here, the GRP exploration prospect. It's on the previous slide, but the upside potential is significant. As we've been announcing in the past, this thing has also in excess of 20 million barrels of oil equivalent if the entire slab, the brownish, is full of oil. But the most likely case where we say the oil to the surface in 1965 is just at the edge of the 2P closure is in the order of 9.5 million barrels. So that's at least as large as Anshof, and it's a relatively low risk proposal. And I'm sure this will get drilled in the near future. Next slide. So we now move to the Upper Austria exploration portfolio. That's sort of not happening tomorrow, but also in the near future. What you see on here is a map. First, you see the country Austria with Vienna and Munich in Germany and Linz in between. And the red insert is where we're operating. And if you zoom in, you see our block outlines in here, which is a bit over 1,000 square kilometers, and some numbers of activities. Yeah. So number 1, down in the south of Anshof, on the right map, you see Anshof GRP, what we just talked about. And if you move further to the south into more hilly mountainous areas, which is also, you know, for some of you who have seen this Hollywood movie, The Sound of Music, this sort of country, beautiful overthrusted area, calcareous Alps. But there has been quite a bit of activity in the past. The largest gas reservoirs in Austria come out of these reservoirs of the Triassic, and this is where our Welchau well is being drilled very soon, we hope. I'll talk about this in a second. That has huge upside potential, but even the certified P50 most likely best technically prospective resources, you know, are close to a TCF, as you can see on the number. And we also know from a nearby discovery, there's quite a bit of condensate in there. So that's something on the exploration front, which is most likely our next well. Talk about this in a second when we come to the slide. Number two, we've already talked about. Once we've got the facilities there and Anshof 2 comes in anywhere near what we expect, it is very obvious to drill the satellites around it. Uli talked about it in detail. This is the GRB. Let's move to the western part, number 3 and 4. I start with 3. We have identified a number of prospects at different ranges of the portfolio, very interesting high impact wells like the Lichtenberg and the Ersdorf well, but also quite low risk but smaller resource sites, but easy to tie in because we got lots of infrastructure on here. Shallow gas leads, which we worked out with a team from Australia, who have a lot of experience in stratigraphic traps, and I've worked many years for BP, Amarada Hess, etc. in Perth. Last not least, we have a very interesting mixed oil and gas and geothermal project, which is very interesting to a lot of local industries because they want to move from the very high gas prices into geothermal industry, for their wood industry, for the pellets industry, for the paper industry. And we're working on them to find a way to finance this well, and essentially we get funded on the exploration side, and if it's a dry hole, somebody else has paid for it. Next slide. Yeah, so this is a summary slide of, before we go to wrap it all up, to the details, some details of the prospects. But what we essentially doing is building the business from the bottom up. We have stable production in the Vienna Basin. We have production now in Anshof, and if you start from bottom to top, the first thing we did when we came into Austria is use sort of this magnifier glass. We were very lucky, we got very good people. It's not only Uli, of course. Uli is our #1 oil finder at the moment, but we have people working in other areas and they might get lucky too, they will. And we identified this as a core area. We also spent quite some time on a very valuable data set, 3D seismic, which cost the previous operator around 100 million euros, and we got access to that to focus our portfolio and decide to drill. And the decision was, as our first well entering Austria, to drill Anshof. We heard this story. We built, of course, a portfolio which has been updated recently. We've got now around 213 million barrels of oil prospective resources without risk, I should say, as they're not risked. And what we've also achieved is farm outs. Yeah? So MCF for Welchau, Ian mentioned this already, but we also announced, when we announced the Anshof deal in the ASX release, that we're discussing with the same company, MND, which is an 8 billion euro turnover company, by the way, out of the Czech Republic. They also have production in Eastern Europe, elsewhere, is very experienced. We're also discussing a further farming deal. We are working on that, as we mentioned in the announcement, and I hope we can make here a significant partnership with them as well and go into drilling these prospects in the West. Yeah? And this is how you create value, by farming out, by funding the exploration program with a mixture of your cash flow with farming out, and also some capital raisings if they are necessary. And that actually builds the company very strongly up to the dollar sign, where we then can realize the value both in our existing oil and gas field, where we continuously make investments. Production has been very stable over the last couple of years, exactly as we predicted and promised, and also in Anshof. Next slide. Yeah, this is the next well. We'll be drilling Welchau. I hand this over technically to Uli before I do so. Everybody is asking, when are we going to drill this well? We are ready. We have the rig. We have the long lead items. We have the approval from the mining authority to drill it. What's missing, and which has been going much faster in Anshof and in other wells, is the environmental permit. Now, it's not a permit, an EIA, environmental impact assessment. It's the waiving of an EIA, an exception to that. And in this case, it takes a little bit longer because we are in an area which also has some touristic interest. And so there is, of course, financial interest and also environmental interest of some groups. And therefore, the authority takes extra care and precaution, and there's more studies than usual to put a report together, which essentially, and I'm pretty confident this will happen, will give us the environmental impact assessment waiver, so we can start drilling immediately. We've already started drilling, by the way, a water well, because the permits we have allows us to do that. This is also important, this to give us an idea about the geology, to set the shallow conductor. The shallow well design is quite important, because we know in the area there have been wells in the past which had quite a bit of shallow gas. But most importantly, and now I hand over to Uli, we've already found real big gas columns very close by in the Mollen well. And this, by the way, is also a piece of work Uli has done with geologists from OMV, RAK, University of Vienna, and under her leadership, of course, as an Alpine Trust expert of trust geology. Uli, over to you.
Okay, so just short, you see a cross-section of the Welcher prospect, which is in a totally different geological unit than what we've seen before. It's within the fold and thrust belt of the northern calcareous Alps, further to the south. And the rocks we observe there are of mainly Triassic to Jurassic age. And in 1989, OMV drilled an exploration well in the south called Mollen 1, and they actually were targeting the Eocene reservoir in the subsurface of these units. They were not successful, but by accident, they found gas within the northern calcareous Alps. And this is where we started off and decided this is a good area to go further on exploration. But with the existing poor quality seismic data and poor quality geological maps and concepts, we could not go on. So we started from scratch, going to the field, and we had a project with the university, having structural geologists and sedimentologists going to the field and assembling all the necessary data. You see small arrows here in at the surface, and so this is the dips and stratigraphy recorded in the field. We there was people were going to the field for two summers basically, and they from these field data they constructed a geological cross section, which was then forward modeled and is now a balanced and restored cross section to ensure the admissibility of this profile and the line length and conservation. So in the center of this cross section, we see a huge anticline, which is called the Welcher anticline, and this is where our first prospect in that area is going to be drilled. So there is the pink is a Triassic limestone, and our reservoir is just below that in a middle Triassic limestone, which is thought to be a fractured limestone reservoir, and it's sealed by a shale unit on top of it in the core of an anticline. So Welcher is the first prospect in the area, but if this well is drilled, there are going to be new results and new data, and we can update our cross section, and there will be several follow-up prospects in the area. For one, in the below in the subcrop where we expect to be further thrust duplexes, but also in the frontal part where another huge anticline is interpreted. So this is the key information about the Welcher prospect in the northern calcareous Alps.
Yeah, thanks, Uli. Just before we go to the next slide, on the left picture, you see sort of the topography of the area. You can see it's quite hilly and mountainous. The colors, actually the colors of the rocks, Jurassic rocks on the surface. On the left, you've got younger rocks of Cretaceous age, and then you've got Jurassic. Geologists have known as consensus for decades that there's a huge surface anticline, but only with the work we have done now for 2 or 3 summers with University of Vienna, there's also a new seismic line, and also the Mollen well data, we've understood how this all fits together, the huge gas column in Mollen and the surface geology, And if you go back to the past of the oil and gas industry, most of the huge gas and oil discoveries on this planet have been made in the past without 3D seismic, but by simply geologists walking around and looking for big surface anticlines. We have one. There's consensus. There's lots of oil and gas around in this area, proven by the Mollen and other wells. I think it's just a question, does the surface anticline extend to the subsurface? In many countries like PNG, Papua New Guinea, which is close to Australia, in Kurdistan, in Iraq, etc., Italy, these concepts have proven to work. And the largest gas production out of Austria comes actually OMV out of these rocks. Next slide. Yeah. Last not least, as I said, M&D, maybe somebody else, but we are working on further farm outs. I'm positive and optimistic that very soon we can achieve this target too, funding exploration with farminees. This is one of the hot targets we are considering as drilling as a next well. It's next to the largest gas storage facility in Austria, one of the largest in Middle Europe. It's 155 BCF gas field, which has been discovered on 3D seismic. And on the right image, you see it in orange colors. And just to the south of it, there's something which looks almost identical, very similar, also on the 3D seismic. And this is our Ersdorf IRR proposition one. It shares many features with this large gas field and now gas storage facility. The good thing is, because there's a large facility around, there's a lot of infrastructure. We can tie this in very quickly. We're currently permitting this location. We found already a location. We found a landowner, and this could be our next well. If you look at the numbers which we've announced in terms of BCF, 40 BCF, best technical upside 80. And if the saints are as good as in the field to the north, the gas storage facilities, it could be even more. To the left is just a 3D seismic of the area. This is just bringing home the message. We've got very good seismic. We can see what we're doing and drilling. And if you know a little bit about geophysics, you could imagine that what we're proposing to drill looks a bit like what have also already delivered 155 BCF. Next slide. Yeah. At the other end of the spectrum, but also equally profitable and even faster to drill and faster to bring to the market, is a portfolio which we've developed with our friends from Australia, who are experts in what is nowadays artificial intelligence software. They have a lot of experience with BP, stratigraphic traps, with another team member, our chief geophysicist, who is experienced in AVO and in the area very much. And we now developed images of the past, many millions, 22 million years ago. There was a big channel, for example, flowing through these areas with a lot of small rivers and then slopes coming from the mountains into the area. This is what this picture shows. And out of this, it's not only fun and very exciting to do this sort of work, but we can develop prospects nobody else has seen before, despite having spent 100 million euros on 3D seismic. And they're coming out as shallow gas leads, prospects now, which are quite profitable too. They talk about 6 BCF, 4 BCF, 3 BCF, most likely resources. You can drill them from the same well pad. They're cheap to drill. They have, which is not shown on here, but I think in one of our ASX releases it is, they have very large upside potential because they're stratigraphic traps. And they have been found and proven in the past already by accident, when the previous operator of the company who operates these large gas fields in the north, which are on the map, these red blobs, drilled through them and suddenly had very good gas shows, and they made discoveries by accident. So these things are proven as well. We took it a step further. We looked for them systematically. We used human expertise, highly experienced people from Australia, with our team, which is highly experienced in the area and in geophysics and leading edge software. So this is quite exciting for somebody who wants to make money very quickly and a very high rate of return and relatively low risk. Next slide. Last but not least, geothermal. Here we've got a very interesting proposition with the 3D seismic. We saw also with the help of a control well, a very large high area, which is highly fractured, which is the Jurassic fractured limestone. The map to the top right shows you that we are in an area close to Munich where lots of geothermal projects are going ahead now. Munich will be completely supplied very soon with geothermal energy only. Munich is the richest town in Germany, the most successful economically, and the same reservoir rocks are in our area. We have reservoir temperatures a bit above 110 degrees, proven. We know they flow well. And what we would like to do is develop with the local industrialists in the area, as I mentioned earlier, this geothermal potential. The nice addition is that we get sort of a subsidy, not paid by the state, but hopefully, and that's the picture to the right bottom, by gas and oil. This is an AVO 3D seismic image indicative of gas in the area. These reservoirs up in the north have usually very, very good reservoir properties, flow rates up to 45 or more million standard cubic feet a day of the order in this area. The productivity is very high. The resources are also not bad. They're around 4 million barrels of oil equivalent, best technical resources. And the geothermal power plant, we've done a detailed study with people also experienced in the German part, in the Bavarian part of the basin, 18 megawatt. So that's something we are working on and seeking a commercial structure with the highly interested local industrialists. Next slide. And yeah, I think with that we are at the end of the technical presentation. I just want to wrap it up. We have discussed the green part in the past. We have also a hydrogen project in the Vienna Basin. Energy storage is a business of the future. We are prepared for that. But our focus at the moment is short-term, quick success, cash flow generation. And we know that oil and gas demand continues to increase. There will be more and more scrutiny on how oil and gas is produced, also worldwide. And I think in Austria, we're in a very good position that we can say the way we produce oil and gas is very clean, is watched by many watchdogs, if you want to, by the authorities, also activists, etc. But we are watched, and we can say with good conscience that the way we produce oil and gas has very low emissions, virtually no CO2 emissions, very little CH4 emissions, and we are working on that together with the authorities to even reduce this further. And this will give us long-term and mid-term a competitive advantage of oil and gas, which comes from abroad, Russia especially in Austria, which is neither politically nor technically a clean fuel. And so I see a lot of advantage for us being situated in Austria, and we can make a contribution to reducing greenhouse gases, which is significant as an oil industry in general, and as the Austrian ADX company here working very cleanly as well. The picture to the right is just a reminder that despite the fact the transition has been very ambitious, we've subsidized it with $5 trillion. That's a study out of the Harvard Institute. We've made some increases of green energy, wind, solar, and nuclear, as you can see on the graph since 1990. But after having spent $5 trillion since 2000, I know the number, until 2020, we reduced from 87% of global energy supplied by coal, oil, and gas down to 84%. So you see how much money we threw at this, and the results are sobering, I have to say. So let's be realistic, and let's produce our fuels as clean as we can. Let's contribute to the energy transition if you want to do it, and let's provide our services to the energy storage. And I think Austria is a well-placed country to do this as well. I think with that, we are ready to wrap it up. Thank you very much.
Yeah, there's just a couple of questions that have come through while we're going through that. Just two around funding, Ian. One is, do we have the cash for well chow, and will ADX be able to drill GRB without third parties to maximise return to shareholders?
Look, as we've already explained, our next 4 wells are predominantly funded through farm outs. Part of the farm out with M&D also involves some success payments, which would come to ADX. Obviously, we're producing as well. Last year, we were able to reduce our debt by 3.3 million. But look, obviously, we're looking to increase our cash flow, which will give us more cash flow for drilling. But it's probably realistic to think that rather than look to accumulate cash for a year or two, that it would be realistic to farm out GRB as well, because as Paul said, if we're successful with GRB, with Anshof 2, we've already got people knocking on the door for GRB. So I think we've got to be pragmatic. While we would like to drill things at 100%, we want to keep things moving. So if we can get good farm out terms, yes, we will farm that down.
Okay, and just one on timeframes for both Anshof 2 and Welchale drill pad. So how long is the Anshof 2 well take to drill to TVD, and the time frame for construction completion of Welchale once EIA approval has been received?
Yeah, look, I mean, by the time we complete Anshof, we're probably looking at somewhere mid-December. Then following the getting results on Anshof 2, actually Anshof will be tested with a workover rig, so that'll probably happen sometime in January. The rig needs to move to do some other work elsewhere in Upper Austria, and that'll give us time to build the Welchale location. So, we're still quite hopeful that we'll be able to spud Welchale sometime during January. Paul, do you have anything to add to that?
No, not really. I think the key thing is that we are on track, that we delivered in time, and the results, despite the fact that Ian said we'll get a workover rig to test Anshof, will be probably in there in late November, early December. Then we'll see where we are on the oil water contract.
Yeah, that's great. Thanks, Paul. And that just answered another question that came through. So that should suffice. And just 2 more questions, corporate related. One is around hedging, considering the very volatile oil market. Do we have a level of hedging in place? And if not, will we put one in place?
Yeah, well, the answer is yes. We've maintained a hedging strategy which has worked pretty well for us. We typically hedge forward between 6 to 9 months. We've had an oil, if you like, price that has been in pretty steep backwardation for a number of years. And we've continued to outperform that. So that hedging strategy's worked quite well for us. So we've got sufficient hedging now to cover our operating costs. That's the strategy we have. Obviously, you only want to hedge where you've got a good stable production, and that's what the benefit that we have from our Vienna Basin fields. And we'll continue to hedge out probably 6 months at a time. But now we're hedged somewhere around the $84.
And just the last one, I'm not sure how to tackle this one properly, but I'll just read it out. You have 40 million outstanding options and 360 million shares free float. What are the effects of that on dilution for investors who are interested in long-term commitment towards ADX?
Yeah, well, look, I think the answer is that the majority of our program is funded from farm outs. But also you drill wells, you succeed, you want to test wells, you want to be able to install infrastructure. So the balance, I think we've got 3 sources of cash flow. 1 is farm outs, 2 is our existing production, and 3 is always equity markets. And we'll look to minimise dilution. We're not a company that's just going to go out and behave like a drilling fund, that's just going to go and raise a bunch of money to drill its next well and torch all the previous shareholders. So I think we've been pretty responsible about this in the past, and I think we're now in a much better position with our farm outs and our cash flow to do even better.
That's it. That wraps it up. Thanks, everyone. That was very comprehensive. I have recorded this, so a recording will be available for those that missed it.
Thanks, everyone, for your attendance.
Excellent. Thank you very much.
Thank you. Bye.